Hello, Stephen Cruz here for another weekly mortgage Q&A. And I was reviewing some of the numbers and some of the questions from the website, and I don't see any on Facebook. What I did have a couple of questions from some clients as well as some realtors. And so I mainly it surrounded qualifying and what income is required to qualify and whether or not you qualify, that sort of thing. So basically, I thought I would review that today and just give you an idea of what you do qualify for. Now, the qualification process is more standardized in that you qualify for a certain amount, but your payment's going to be much lower, as I had said in the past. So let me just flip over to my screen. I will share the screen, and then we can look at some of the numbers. So I will do that right now here. Oh, that didn't work. Let's try that again. We'll share the screen now. Share screen. All right. So these are some examples of incomes and what you would qualify for based upon your income. So if you have an annual income, or your household income, or the two people purchasing earn $50,000, then you would qualify to purchase a home with 5% down of $250,000 and $251,000. If you have an income of $90,000, then you would qualify to purchase a home of $467,000 with 5% down. And then if you have a combined income or your own income of $120,000, you would qualify to purchase a house up to $629,000. Now, this is assuming that you don't have a ton of other extra monthly payments, and it's also assuming you've got good credit, etc. The rules, when they were changed, affected, they allowed everyone, no matter what your credit score is, to qualify up to 39% of your gross monthly income. So your housing costs, or the qualification costs, are 39% of your total monthly income. So as you can see here, if you make 120 grand, you earn $10,000 a month, $3,900 can go towards your housing costs. In this purchase price, I'm estimating 3.25%. So really, if there's kind of a rule of thumb now that we could use if you're looking to qualify for a house, and the rule of thumb is about 5 times your income. So 50,000, you qualify for 250. 120,000, you qualify for 630. So it's about 5 times your income. So 100,000, you qualify for 500,000. If we were to look at the payments, and I never thought about that, other payments. So if you wanted to consider how much in additional payments you could have, then so a car loan payment or something like that, then it would be equivalent to 5%. So you could have other monthly obligations totaling $200 a month if you earn $50,000. If you're earning $100,000 a year, for example, and you want to buy a house worth about $500,000, then you can have other payments, including credit cards, loan payments, student loans, anything like that, lines of credit. The total payments could not exceed $416 for you to qualify for this purchase price. So hopefully that is something you're looking for, and hopefully that answers your questions. I'm going to post this image as well on the Facebook page, and then you can see this. And if you have any questions about this or anything else, then please feel free to call me. I really enjoy doing these on a weekly basis. It's really great to see people and answer your questions if you have them. I'll just check right now, in case you have any questions live. There's a few people watching right now, so if you wanted to post a question right now, I'll answer it. Otherwise, we will we'll end session. It's Halloween today, so lots of kids coming to the door and dressed up in all sorts of costumes. And I miss the days when I used to go out with the kids and take them door to door. They're too old for me now to go with them. So, but they still go out and have lots of fun by themselves now. So, anyway, I don't see any other questions coming through. So, happy Halloween, and until next week, we will see you again. This is Stephen Cruz with MyMortgageBroker.com, signing off. Have a great day.